Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Seresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for November 8th, 2010. This is Patrick Seresna. As always, we start off with the S&P 500 using that SPDR exchange rate fund symbol SPY, and with the Republican victory and the subsequent Fed quantitative easing that came out, the market very bullishly responded. And what's very positive about the price action itself was that it was actually able to push the market to a much higher high than its previous high that it put in the 121 to 122 area. So now we've got both all the Nasdaq, Dow, and the S&P 500 at new year highs. And that and some very bullish follow through at this juncture. We could still see a move up to 124 to 125 on the upside on the S&P to follow through. Now recognize that our conviction of there eventually being a 5% market correction is actually not changed. It simply means that with all the stimulus and all the actual market momentum, it'll probably have to happen off of a higher level. And so we're now going to let the market kind of finish off this move, see where the momentum drives this market before we really start seeing where that corrective pattern occurs. And recognize whether the corrective pattern occurs off this level like we were originally anticipating, or whether it comes off of a higher level, we still believe that market pullback will only emerge to being a buying opportunity. So in no way do we want people to have the same perspective of the fact that there's a risk of a market crash and they need to be panic selling out of there and going back to cash. Really just simply pointing out that the markets never advance really in a straight line and that they usually zigzag on their way. So we're going to look for something to kind of gravitate down toward the mean and a 5% pullback before we proceed higher for the remainder of the year. Next year, I want to take a look at the ISE US Regional Banks Index, the symbol JLO. Very positively, the regional banks never gained any momentum on the downside on that foreclosure mess, and really did actually hold that 2150 to 22 zone on the downside. Very strong positive reversal that broke the market right up into the 2350 focal point. Even though we had a trading all the way up there, you can see that long shadow. This is a slight overhead resistance at this juncture, and we could end up taking a small break in the zone in here. But overall, if that was a legitimate bottom that was put in on that retest around the 2150 area just last week, then even a short-term pullback will probably just be a buying opportunity before we find ourselves at the 25 level on the upside over the next month. Next year, I want to take a look at the ISE index, which is symbol SIN. This is indexable to casino, tobacco, and distiller companies, and driven on the backs of Las Vegas Sands and other hot stocks like that. We've got the Syndex driving very strongly up. We originally were targeting the 120 to 130 zone. It's now clear that the stalling actually occurred slightly above there in this 130 to 132 area. And as a matter of fact, with this momentum, the highs of the last major swing all occurred up at the 136 to 138 level. So there is a chance that we may even see a strong bullish follow through all the way up in there. Now, this is a sector that is well overdue for some profit taking. I don't believe the fundamentals are even remotely as good as they're seeing appreciation. It's more than likely just an attraction to the hot sector or the hot place to be right now. Those sectors tend to be extremely dangerous because when finally the music stops in the game of musical chairs, usually the market correction backwards tends to be far steeper and more dramatic just because of the nature of the rise. And so recognize that there is a lot of momentum, and there certainly is room for an upside follow through, even up towards 138 or even higher. There's even one measured move even up to 150. But overall, it's a very high risk, high reward kind of proposition. There's a lot of volatility, and anyone that is not willing to ride that kind of high risk volatility should be looking at other sectors. Next year, I want to take a look at the ISE Home Builders Index, which is symbol RUF. We had a very bullish reversal. That support came in around that 875 to 9 area on the downside, and a reversal that actually broke above the 950 area. Very positive, because now we had a higher low and now a higher high, which is at least solidifying that double bottom that was put in at the $8 level back in the summer. And with this kind of reversal here, this sector has actually room to go. Now our first upside target is 10 to 10 and a quarter. But if this is a bigger picture reversal, we could even see 11 or $12 on the upside over the subsequent months. But we probably won't go there in a straight line, nor will it. We'll have a number of periods where it consolidates. But in the bigger picture, that's what we're seeing here. Next year, I'm going to take a look at that ISE Natural Gas Index, which is symbol FUM. We were looking at this flag last week, saying that if we have a break on the upside of this flag, we should see follow through to the 107, 109. But also, there was a measured move that even could go as high as the 112 area. It worked out to the T. We now are finishing this move. We do believe the next major upside target is 115, 117, where the highs came in back in April. But I don't think that we're going to straight line move it there. So at some point we probably will even retest that 107, 109 level back on the downside. But I think that naturally this gas index will gravitate, and we will see 115, 117, even though it won't straight line there. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is symbol UKX. That little pullback that we saw the other week did not actually even go down to test that 550, 555 zone, which was a support line, very shallow, and then a reversal on all the global markets going higher based on that U.S. stimulus. At least the U.S. markets kind of drove all the global markets to want to pursue higher moves. Really, at this stage, with us now breaking to a higher year high than the April highs, the window is open for a move to go all the way up to its major high, up around the 630, 640 area. On the short term, though, this short-term move should stall somewhere in the 6 to 620 area, pull back before that upside target. Realistically, that 630, 640 is a target that can be hit. Just more than likely, it's not going to happen in a straight line motion. So watch for overhead resistance, maybe about another $13 higher on the mini FTSE. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.